Hi friends, today let us talk about two new energy, particularly wind energy businesses, Suzlon Energy and Inox Wind. They have been in news during the past couple of weeks since the brokerage firm Anand Rathi initiated coverage on them with a buy rating. In this video, we will go through each of the reasons provided by the brokerage firm for their bullish forecast on the two firms. Our focus will be mainly Suzlon Energy, but we will share some details on Inox Wind as well, especially towards the end of this video. To understand this better, let us walk through the history of Suzlon Energy just a little bit. Many of you may know that Suzlon went public long ago in 2005. It had global ambitions and took a lot of debt to acquire many foreign companies prior to 2008 global economic crisis. In early 2008, they hit peak with their stock price trading at rupees 400, and when the global economic crisis hit the market in 2008, the stock nosedived to just rupees 32, losing more than 90% of its market cap. The company was on the verge of bankruptcy post-global economic crisis in 2008, but recovered in 2014 to capture 20% of Indian wind turbine market share. At present, Suzlon has 32% of Indian wind turbines market share. However, the stock almost never fully recovered from the meltdown it experienced in late 2008. In fact, it was trading around rupees 8 at this time last year as a penny stock before registering a 400% rally during the last 10 months to reach the rupees 40 price that we see today. Now we have several brokerage firms like Anand Rathi and ICICI Securities issuing a buy call on Suzlon. Let me share with you some of the key observations made by Anand Rathi on the growth prospects of this firm. First, regarding the fundamentals, the brokerage is happy that company achieved net cash status in the fiscal year 2024. So for the first time since fiscal year 2006 when it went public, Suzlon now has more cash than debt. In fact, the company is now almost debt-free. The brokerage firm notes that wind turbines market in India has now shifted from government subsidies and incentives to more market-linked and commercial and industrial demands. The wind turbine sector was earlier hit by frequent policy changes, little capacity addition and high capex involving heavy debt. The sector stagnated since 2017 and has now recovered with order book of Suzlon increasing nearly eightfold from just 370 megawatts in fiscal year 2023 to 2,900 megawatts in first 10 months of fiscal year 2024. Suzlon's order book as of Jan 2024 totals 3,200 megawatts, while that of Inox Wind is about 2,600 megawatts. In other words, the growth for Suzlon and Inox is now more sustainable. Further, the brokerage noted that competition has come down in the sector since many players exited, leaving Suzlon and Inox Wind to dominate the market. Second, both Suzlon and Inox Wind operate across all aspects of the wind energy value chain, from manufacturing wind turbines to installing, servicing and maintaining them. This integration allows for better control over costs, quality and timelines, which can be a great competitive advantage. Anand Rathi also noted that the Suzlon is now innovating with new products like the 3 megawatts wind turbines. Third, the domestic wind capacity is now 45 gigawatts and it is projected to grow to 100 gigawatts by 2030 as per the data provided by Union Minister for New and Renewable Energy and Power. Suzlon and Inox Wind being the dominant players without much competition, they are expected to play a major role in achieving this growth and reap the rewards of the same. All of these factors can contribute to profit after tax or PAT to grow at 64% CAGR during the next fiscal year 2024-26 for Suzlon, estimates Anand Rathi. Also, the ROE or return on equity for the two firms for fiscal year 2025 and 26 is expected to be in the range of 20 to 39%. Multiple re-evaluations of Suzlon and Inox Wind by brokerage firms can be attributed to improving return on equity. Further, CRISIL has upgraded Suzlon's ratings to A- with a positive outlook in alignment with company's strengthened financial position. CRISIL wrote in its note, the rating upgrade factors in higher than expected improvement in the margins of wind turbines generators business, while maintaining healthy cash flow generation from the operations and maintenance services business, and an uptick in the order book providing visibility for future revenues. On the flip side, Anand Rathi did mention a few risks. Adverse government policy changes, if any, can impact their business. As demand soars, international players like Envision can be expected to compete with domestic firms like Inox Wind and Suzlon. Personally, I am a little worried about the low promoter share in Suzlon. It is just 13% and has decreased by more than 6.5% during the past 3-4 years alone. However, the foreign institutional investor holding has seen a rise from 7.6% to nearly 18% in the last fiscal year 2024. Inox Wind has seen a similar rise in foreign funds holding, shooting from just 2% to 9.49% this year, while the domestic institutional investors increased their share from 0 to nearly 10%. The promoter share in Inox Wind remains at 52% on December 2023, a drop of nearly 20% from the previous fiscal year. Regarding Inox Wind, Anand Rathi expects them to do a sharp turnaround in earnings during the fiscal year 2024-26. The firm is restructuring its balance sheet to support growth and achieve financial stability, feels Anand Rathi. After turbulent fiscal year 18-23, the company has reduced its interest-bearing debt to rupees 500 crores in Q3 of fiscal year 2024. Inox Wind has an order book of 2,600 megawatts. Anand Rathi expects them to deliver 450 megawatts of power in fiscal year 2024, 700 megawatts in fiscal year 2025, and 1000 megawatts in fiscal year 2026. Their existing land bank may support 5000 megawatts of capacity. Hence, the company may be able to deliver on the present order books quickly. Finally, when it comes to price forecast, Anand Rathi has set a target price 590 for Inox Wind, which is about PE of 30 based on fiscal year 2026 earnings estimate. The target price for Suzlon is set to 49, which works out to be PE of about 35, again based on fiscal year 2026 earnings estimate. The target price for the two firms are about 20% above the currently traded price of Rs 42 for Suzlon and Rs 522 for Inox Wind. So that's it folks for today. Thanks for staying with me here. I'll catch up with you in the next video. Till then, stay calm and invest safely. Bye-bye.